If I knew nothing about day trading, here's everything I would do to get really good as fast as possible. Part one, pick the right asset to actually trade. Now, there are a lot of options when it comes to day trading. You could trade crypto, stocks, options, Forex. We'll cover it all, and I'll tell you the best one to trade because I didn't even list it. Now, here's why I wouldn't trade crypto to start with. Number one, highly volatile, and you need a lot of capital to do a lot of damage. Now, the argument or pushback I might get is you could do meme coins, but that's highly risky, mostly speculative, and very difficult to have success. In fact, most people don't have success. They lose a ton of money and they don't talk about it. That's why you don't hear about it. So crypto is out because it's not newbie friendly. It's very, very difficult and it's highly manipulated. There's a lot of nefarious things going on behind the scenes that push these prices, and it's not organic. Let's talk about stocks. The reason that day trading stocks doesn't make a whole lot of sense is when you're new, ideally you want something that has a low amount of capital to start and the potential for you to make a ton of money. And stocks don't give you that option. With stocks, you have to invest a lot of money to see marginal growth. You're typically not even going to see 1 to 2% on a move, even if it moves a ton, because that's not how stocks work. Now, stocks and options are different. Options move differently. We'll talk about that next. But with stocks, you're buying shares. So you're going to need to spend $25,000, $30,000, $50,000 to see any meaningful movement, and you still might get it wrong, and you probably will because you're new. So stocks are also out. Now let's talk about options. These are also peddled as a newbie-friendly asset, and I just think that's not the case. With options, you have two battles that you have to win. Number one is the analysis. So you have to look at a stock and then figure out if it's going to go up or down. Let's say you pick Tesla, you think Tesla's going to go down. Fair enough. You then have to buy the right contract. And that contract has a ton of variables that could be working against you. And so you could, in theory, buy Tesla puts, price goes down, and you still lose money. You did everything right, but you still lost. And that's because you have Greeks and different things you have to worry about, expiration and strike prices. So for that, just with the complication alone, options are also out. Now, the last asset you shouldn't trade is Forex, and for a lot of reasons, but mainly two things. Number one is they're highly unregulated when you get outside the United States, and if you want to use leverage, getting outside the United States is the best move. Number two, every time you get into a trade, you're down a significant amount. Like so much that it feels like there's almost no way for you to actually win trades based on your broker. And so for that, Forex also has two hurdles. US has strict laws, and then you go outside the country, they're going to scam you. So for that, Forex is also out. Now, if you're a brand new trader, the asset you should absolutely start with and stick with is futures. But we'll get to that in part two.